JV Cycles here with an update on August the 13th. Is the relief rally finished? Well, in hindsight, I should have been much more bullish here in July, August. I was expecting a relief rally in the summer, and then in this phase of a potential hard landing and bear market, these relief rallies, they typically go up near the 200-day moving average. And yeah, the area 4,200 to 4,300 was kind of the area we should have expected. So we pushed a bit higher the previous week, and we are at this, I think, critical horizontal resistance level, and we are at the point where my 4-week cycle has its high, and I still think this is what we should expect for the fall. Let's switch over to some comparisons here. These hard landings are quite rare. So in my data going back to the 1950s, we don't really have many cases to compare with. So the assumption that this will be a hard landing is, the odds don't really favor it. And I also earlier said that the low we had in June could be the bear market low. It had reached the typical downside target for a mild bear market. So now the coming weeks will be very critical. Will my assumptions fail? Was all this just a buying opportunity, and have I been too bearish? And But here we see these bear market rallies compared. I have centered them around, I think, the 11-day moving average or something, not the price low. So as we see the previous cases here, they suggested the bear market rally top just where we finished, well, time-wise, on Friday. And they could suggest we should go sideways, kind of sideways for 2 weeks before we should turn down lower to a lower low. Okay. These are the same bear markets measured from the price high, and they told me, suggested to look for a medium-term low in this area, and we got it early here. And if we look at the tops here, they kind of suggest to look for a top in this area, and we are just in the beginning of this interval. So this is synchronized by the market high, but if we look at the cycle situation on the 7-year cycle, we see the bear markets in the year 2000 and 2007, they topped out early or earlier in the cycle, here and here, or a double top here. So these two, they topped out early and started their relief rally at this point. And then we have two other cases. We have the present and the 1972, 3, 4 bear market. And as we see, they topped out up here a bit later. And they had their first leg down into here, and then the relief rally here. So these bear markets, they are not all aligned in the same way compared to the cycle. But as we see here, we have the cycle favors downside, and as we see, the previous cases, they went down here. So what to expect? Well, if we pull back and continue up here, I think the hard landing scenario is pretty much dead. But if we do have the hard landing, we should very soon turn down and go to a lower low, perhaps consolidate for a while and then continue down, or we could just crash down in the fall. If we look at the cycle situation, here in red is the 7-year cycle, and in green I have the 9-month cycle, and these two cycles they are related. So as we see, in red the 7-year cycle has its most bearish period here, and in green we see the 9-month cycle also obviously or naturally has a bearish phase here starting right now. This 9-month cycle is not very accurate or good for trading mostly. If we just look back here, okay, in this period in blue we see the S&P was weak. Here, no, not really weak. It was too early in the 7-year cycle, and here, no, here, yeah, well, it went sideways. In this phase, yeah, really bearish. Here, yeah, pretty much bearish. Here, no, not really. Here, mostly sideways. Here, yeah, well, it crashed down but bounced up, and the bearish period kind of extended a bit more. So let's switch over here to yeah, the overall scenario from the cycle. It's these waves here, and we see we made a low here and we made a low here, and the next low should be in the fall. So we broke this trend line as I expected. I was kind of hoping for we wouldn't breach this resistance, but we did, and I should have expected that. So I think this is the final important resistance, and we should turn lower from here. Also I have, if we look in the background here at this, we should not break, in the bearish case, we should not break above this level here and start to get up in the white area here. This is, by the way, the 6-month shifted S&P. So we could chop around here, but should turn down and stay below this shifted index. Should not go up here in the white area, or not much. So yeah, it's a critical time, and although I'm not wishing for a hard landing or any wars or anything, that's my interpretation of the cycle situation, and what I think they warn us about and what they suggest will happen. But I may be wrong, and if you look at this very bearish period in the 7-year cycle, it means it has a very high percentage probability of the market being very weak here, but it has occurred indeed a couple of times going back to the 1950s that this very bearish period didn't materialize in the market. So we have to overcome this. I don't think we will, but I may be wrong. Okay, see you in the next one.